All right, good afternoon, everybody. Good afternoon. So it's Saturday, August 10th, and so this would be our going into the second full week of August. So last week we saw some gymnastics going on in the stock market and among other markets. So we'll definitely get into that and we'll see how our analysis lined up with those big down moves. But today, before we get started, I would like to read Psalm 20 for you guys. So the title is Trust in the Name of the Lord our God. This is a Psalm of David. So here we go. May the Lord answer you in the day of trouble. May the name of God of Jacob protect you. May he send you help from the sanctuary and give you support from Zion. May he remember all of your offerings and regard with favor your burnt sacrifices. May he grant you your heart's desire and fulfill all your plans. May he shout for joy over your salvation, and in the name of our God, set up your banners. May the Lord fulfill all your petitions. Now I know that the Lord saves his anointed. He will answer him from his holy heaven and the saving might of his right hand. Some trust in chariots and some in horses, but we trust in the name of the Lord our God. They collapse and fall, but we rise and stand upright. O Lord, save the King. May he answer us when we call. Amen. Amen. If any of you watch this and you hear me praying, I'm not the best prayer, okay, but I make it a point to pray in every meeting. But if you don't pray and you don't pray because you're not used to it or you don't know how, like, I'm not even kidding you. Just go to the book of Psalm. Those are all like approved prayers. Those are literally scripturally approved prayers. So if you just would read those out in like the first person, so just switch some of like the you words for I and stuff like that. You will definitely feel the power of reading those prayers and read them out loud. Okay. And read them, write them on your heart, and believe them for yourself because they are some powerful words. I promise you, they're very powerful. It's absolutely awesome. But cool. Okay. So, and my internet is kind of struggling today, so I apologize in advance if there's any lags on this um, broadcast, but we're gonna do our best. So first and foremost, we can start with the dollar, but let's just talk about what happened last week. So just for example, this was Sunday's open, okay? And this is a 4-hour chart. And I remember last Sunday when the market opened, I don't usually look at the market like right when it opens because I know that it usually just consolidates for the most part and it's just really boring. So I honestly don't even really look at the market until like Sunday night before I go to bed and I kind of get an idea of what it's doing. 9 out of 10 times it's just consolidated in one area. But last week, for whatever reason, I think it's because last week we spoke about possibly having a like a sweep, a sell side sweep going on. Here's Sunday open as well. But So I just looked at my phone. I want to say it had to have been about like 7 p.m. Around that time. And I just remember looking at my phone and just seeing this just drop, like literally just tanking. Oh, maybe it was later than that because it could have been around 8 to 10 that I looked at my phone, but it was just dropping and sinking. And I just remember thinking to myself, what is going on? So I immediately started because okay, because you can get liquidity sweeps when the market opens. That's not a big deal. You know what I'm saying? But the volume of this one, I just immediately was like, what happened? What is happening in the world right now that's making the charts do this? And so I go on my phone and I'm like reading through all the news, and there was definitely rumors that had come out over the weekend about another attack from Iran to Israel, um, which didn't happen, by the way, to my knowledge. And then what else were they saying? Pretty much, as you guys all know, there was a very large decline in the Japan stock market. Um, I believe the largest decline in price within the last few decades, I want to say. Um, I think it was like since the 80s or something like that, that the Japanese stock market hadn't like literally fallen that much in within that amount of time. And so, if you have pretty big institutional investors that are invested in multiple stock markets around the world, um, and they start moving their money, it's not going to just affect, one market. It's going to affect multiple. Um, a lot of companies also have, uh, factories in other countries, stuff like that, that are on stock exchanges. So all the stock markets pretty much move in tandem for the most part. They kind of move with each other. So there was that. And the reason that that had happened over in Japan is because they had raised their interest rates again for the first time in forever. So their interest rates were at, I think last year, it's been a while since I've traded currency pairs, but last year, I want to say their currency rate was at negative 10%, which is crazy to think about because if you're a Japanese citizen and you put your money in the bank, you're making a negative percentage on your money. So, but then they raised it to zero, and then they raised it again recently to 0.25. So that is very catastrophic for the markets because if you have people, it's called the carry trade. There's been a lot of talk about this. I'll just explain it really quickly. Okay. So if you have like a country with a 0% interest rate, right? It's not going to cost you any money to borrow. It's not going to cost you anything to borrow money. You can borrow money for free. So, like, I can take out a $1 million loan. You know what I'm saying? For free. It's free money, right? So I'll take out 1 million yen. You know what I'm saying? And then I will go and exchange it for into another currency that has a high interest rate. And so if you haven't noticed, the US dollar has peaked in interest rates. So the US dollar was at 5.5, where we still are. Okay. So they borrowed money for free and they exchanged it into another currency that has high interest rates, right? So now they're making 5.5% on the money that they borrowed for free. So they're making money off of somebody else's money for free. And so a lot of institutions. And what I mean by institutions is I mean players in the market that have enough money to move the market anytime they make a sudden movement, trillions of dollars. So when this interest rate goes to 0.25, okay, that now these people are not making money for free. They're now getting charged money to make this, right? And there's also talk about us lowering interest rates next month. Okay. Everybody, it's already priced into the market. The bonds are already auctioning off with a lower yield. It's already priced into our market. Okay. So now this gap between this yen interest rate and this US dollar interest rate is closing. So we're at 0.25 here. Okay. And now we haven't officially lowered yet, but if you haven't noticed, the markets have already priced it in, which means bonds are auctioning off with lower yields. That means mortgages have probably come down. That means it's already affecting the whole entire market, right? And so the gap between this 5.5% and this 0% is closing. Okay. So they're starting to make less on their money. And that is going to continue to close over time because we plan to continue to lower rates. And I believe the Bank of Japan may intend to continue to raise their low interest rates. Okay. So that gap's closing. So basically, this market has peaked for this. For these institutional investors, the market has peaked for them. So they're going to start pulling their money out, right? And they're going to move it somewhere else. Okay. So people are selling, their US, they're exchanging it back because the longer that they wait to do that, the less money that they're going to be cashing out for. Because not only are they making money off that 5.5% interest rate, the actual exchange rate for the US dollar to the Japanese yen will start declining. So they're going to be getting less US dollars for one Japanese yen, if that makes sense. So their window's literally closing on how much they can profit by taking out these loans to go invest in another country's currency. So that's why we see a huge decline in this price here. Okay. And was I on? Okay. So the stock markets, so people start to freak out when they see this happen. Okay. So people get scared, they start pulling their money out, especially like retail investors and whatnot. And pretty much when these institutional investors are going to be pulling their money out at such a large quantity, they're going to want to immediately put it back into something. Okay. So these investors are selling high. Okay. This market's peaking. So they're selling their US dollar investments and they're transferring it back into yen. Okay. And they're going to want to buy something that's low. So the way I see it is the stock markets are low. The Japanese stock market, the US stock markets, the European stock markets, everything's down right now. And it's just like to say that that's an accident for that to be super low right when they start taking their money out and need something else to invest in is just like I always say when I do these analysis, like you really can't make this stuff up. So let me see. But yeah, that's pretty much the concept. So it's just like there's a lot of money being moved around right now. Another market that I noticed that this was happening was I'll pull it up. I think it's on a different I believe it's Brazil and the Japanese yen. So Brazil, our interest rate was at 10 or 5.5%, right? So like look at this sharp sell-off right here that has happened all like since July. So same thing happened in this market because the Brazilian real, their interest rate was 10.5%. So that's pretty crazy. So if you're borrowing yen for 0% interest, you're borrowing money for free, and you go and you exchange it and like into a different country's currency where their bonds are paying, close to 10%. That's pretty crazy. That's a large return. And I would say the only reason why the US dollar trumps, I mean, like people are still going to invest into the US currency a lot more is because the US dollar is the safest currency in the entire world. US bonds are rated as the safest investment to buy in the entire world. And they always have been. But that's just because that's the, reputation that the American market has, but like you see it happening in other markets. So it's just like if I was to measure this, so this has moved 560 pips since mid-July. So for a month, this has moved 500 pips to the downside, which is literally crazy. So a lot of people are freaking out right now. I had a lot of people at my work ask me because people know I day trade and whatnot, and they're like, oh, like I told you this, and I'm like, what do you mean you told me? You told me what? But the stock market's down, so everyone's freaking out. So, but my point is like, don't freak out because this is happening on purpose for a reason. This isn't an accident. And just going back to, it's how they move their money. And going back to when I noticed that there was like rumors of Iran attacking Israel and things like that. I'm not trying to say that that's not going to happen, but it's been multiple times in this war that they start pushing rumors out of something happening. Like they leak stuff happening, and they use it as a cover up to push the stock market down, to push prices down. Because when war happens, people freak out and they take their money out of the stock market historically. So I think that those rumors were pretty much because I mean, I'm sorry, but if Israel, their military is extremely like advanced, and so is ours, and like stuff doesn't get leaked like that easily. You know what I'm saying? So yeah, so that's pretty much what happened over the week. But like we dropped and we literally completely recovered, within a week. So the stock market recovered its losses within 1 week, which is pretty spectacular. Bitcoin, same thing. During open, it kind of just tanked and it recovered its losses within a week. So, which we don't really talk about Bitcoin, but that's just like a quick word on Bitcoin. So since this carry trade's happening, right? People are looking for places to put their money. Okay. The stock market's down, crypto's down. And by crypto, I'm specifically referring to Bitcoin. I can't really speak for other cryptos because I'm still like just now starting to lock into Bitcoin. But I do know that the SEC is starting to approve ETFs, and there is an ETF for Bitcoin. which means that the institutional investors, aka like BlackRock and like big money managers who hold trillions of dollars for people, they actually have created a safe way for these investors to invest into Bitcoin now, which didn't exist before this year. And that's huge because this is relatively huge market. So now that that has been approved, there's literally trillions and trillions and trillions of dollars that is now available to be invested into this Bitcoin market that wasn't previously available. This market has been pushed specifically by retail investors because like these huge investment firms weren't allowed. It wasn't, they weren't investing into it because it wasn't safe. It hasn't been around long enough. There's been so many scandals, you know what I'm saying, that's happened already. And so they've just kind of like not touched it. So this is like the way Bitcoin has gone already. This is like mostly like retail people who are at their own risk buying. So now you have the huge investment firms that can start investing, you know, professionally into this market, which is going to be huge. So I think that this is possibly a bottom on Bitcoin right here. I could see another push. Me and my girl were talking about this. I could see another push to the downside again, maybe a double top or a double bottom, or maybe a new low. But I do think that this is likely going to be the area. So we'll see what happens. This week's going to be big. Dang, I've been talking for 30 minutes already, but we got to talk about this, okay? It's important to understand macroeconomics. So the interest rates are changing. We're having CPI, PPI out this week. I very much think that they're going to raise rate or lower rates in the next meeting. Some people are saying that they're going to lower them more than we thought, but the market freaked out this week because, oh yeah, another reason is because we had unemployment ending the Friday prior to this drop came out extremely high. And everyone was freaking out like, oh, you know, the interest rates have been held for too long. It's damaging the market. People are losing jobs. They can't get money, no spending, collapse in market, right? Everyone started freaking out. But the report that came out the following week, which was this week on, I want to say like, I don't remember what day it came out. It came out on Tuesday. So this one wasn't that bad. It actually was like higher than expected, which I think these expectations may have been set weird because of the previous one. But it kind of like knocked some sense into everybody because there was a hurricane over on the East Coast, and it might even still be going, but there was a hurricane, and typically, you know, when you have natural disasters, people are put out of work for a certain amount of time. So they have to go to the government and they have to go apply for financial aid. So there's going to be a spike in unemployment claims when stuff like that happens. So it looks like that's what happened. So I think everything's calming down right now. But it's going to be CPI and PPI this week. So I don't want to say it's going to calm down just yet, but so yeah, so that's kind of just the fundamental talk. And like, I don't even like talking about fundamentals. You guys know that I really just pay attention to my technicals, but like when it's on a macro scale like this, it really does matter because at the end of the day, that is like, you know, we can track this algorithm all we want, right? But the macroeconomics are, you know, also what influence the algorithm as well. So we're seeing a big shift in that. So yeah, so that's my TED Talk on what happened this week, macro wise. And if anybody watches this and I missed something or I didn't explain something correctly, please let me know because I'm still a student, I'm still learning. But yeah, so let's get into our technical analysis. Okay, this was Monday. So the dollar really didn't go anywhere, honestly. Like it sold from our analysis last week, and I didn't even mark Sunday open. But Sunday open is right here, this candle. Okay, so there's Sunday open. We had our sharp drop, just like we've seen in other markets at the beginning on Sunday. And then it kind of just consolidated around here, which genuinely, if you look at the stock market, it consolidated. Like if you look at the weekly candle, this is like a consolidation candle. Because price, like look at that. Price really didn't go anywhere. But the dollar really did, it just came right back to where it started, and it just kind of hung out near market open. So okay, so last week, take swing low by Tuesday, Wednesday, pills for the week to upside to retrace. I don't know. I would say our option 2 kind of played out. Then sweeps low and pushes into fib levels. But this, I don't know, it's kind of a mix of both, because we had these bearish objectives to the downside, which I had marked. So we had our 6-month 78 and we had our negative 27. And right upon Sunday open, those objectives were hit. And then price, I was anticipating that when these levels got swept, we would see a large push to the upside. It would start climbing to retrace the bearish movement that it's had recently. But like I said, we just stayed here, which isn't really surprising because of the fact that we have such a news heavy week this week. So it's kind of just building up momentum. Okay. So for this week, so clearly this, I'm going to delete these real quick. Clearly this candle right here is like a rejection candle, you know? Some could say that this is definitely like, it's just sweeping this low right here. We have had our eyes on this swing low because this was the low that I wanted to see get broken to where I was like, okay, price isn't going to come back up here. You know what I'm saying? Or likely it won't. If it does, it will be in the form of like a buy side sweep. But so yeah, so we've officially gone below this level. So that's pretty significant for the dollar. To me, that means that they have actually already priced in the rate cut on the dollar, because I've just been anticipating that they're going to push back up before the rate cut, and then it's going to drop from like up here. So this kind of just proves that it's officially priced into me. And I see two things possibly happening. So we could just get like, here's our Sunday open. We could just get like a retracement of this bearish leg that we never got last week, and then just like a continuation down. This retracement could go even higher. We did have this level marked for a while now because this is a weekly imbalance right here. And I liked it also because it would be taking out this week's high, which is a level of buy side liquidity. So we could see this and this, you know. When is our meeting in September? I think it's mid-September. I want to say like around the 19th that we have a FOMC meeting. So I just don't like the idea in general that price is going to be at a discount when they actually do cut rates. But we still are a little over a month out. So we could definitely get a move down and then it comes and pushed back up, you know, before the rate cut happens. So if we drop down to the 1 hour, we have all of this liquidity that was created this week that we could mark. So if I was to redraw this arrow for us, we would get like, I don't know, where's the high of the week? This is the high. Is it? Yeah, it is. Sunday. Yeah. So we could like get this high taken out, right? And then price comes down in here around Monday. And then we get a push up into here by Tuesday, Wednesday. And then we see our continuation down. And like I said, maybe price gets all the way up here. That's pretty long distance, but I mean, it's CPI week, so I wouldn't be surprised. But if you were to fib this bearish expansion right here, and it just came into these areas, you know, we'd see it come into, here's the 78 right here. So, but just keep your eye on this location, because if you also can see on the 1 hourly here, this could technically be considered trendline liquidity as well. So we'd be sweeping 2 levels of liquidity and we'd be filling a larger imbalance if we did get up there. So there's definitely multiple objectives to satisfy in that point of interest. So just keep that in mind. And then oh yeah, and here's a daily bearish order block as well. So it might just bounce right here pretty easily and continue down. So that would be kind of like my bearish outlook. Bullish wise, I think that we would get like some sort of sweep at this level still. I mean, this is pretty obvious. I might just trade, honestly, a sweep into this level on the dollar now that I know you can actually trade it. But we could get a sweep here on Sunday and then a push Monday into this order block. And then maybe our low gets taken. So this would be like our Tuesday, Wednesday. Maybe it doesn't sweep the low. Maybe it just bounces and gives us a double bottom before heading up. And then we head up for the rest of the week towards these levels. So I wouldn't be surprised if we just got more consolidation Sunday through Monday in this area here that is going to end up getting swept. So, but over the long run, price is going to continue to push down for sure. Um, um, so real quick, just looking at the higher time frame. I think that this would be our next bearish objective on the sell side. This gap right here. But last week we did hit our 78% on this bullish order block. So I do believe that this order block, I mean, it might not take price all the way up here, but I do think that it will have a bullish reaction. So just want to keep that in mind. Like if price was going to be able to get up to this area, it would probably be around this time, because of the level it came to and tapped into on that order block. Okay. Is this gap? Wow, okay, that gap's actually pretty close to where price is already. So, because I didn't even mean to draw this down into this rectangle I just put here, but I mean, it's like right below price. So I kind of like both of these options. If you can see it, like, not that this has happened, but if this plays out, price is just bouncing between fair value gaps. It's like I say, like price is like a pinball game. You launch the ball and it just bounces between objectives um, on its way to its main objective. And that's basically the definition of order flow. Okay, so yeah, so I like this. Okay. All right, screenshot. Yeah, ever since I figured out I could actually trade the dollar, I have Osprey. It's not an ad, but I've really been wanting to, and this just looks like some easy pickings right here. This trend line liquidity kind of just looks pretty easy. So there's ghost feed forecast. So it kind of looked like, what is this? Okay, wrong tool. What? Okay, that's not it either. I'm trying to find where you can like draw candles. Ghost feed. Oh, there you go. Boom. It's kind of ugly, but yeah. So if this sweeps around Sunday-ish, it's gonna, this would be an easy sell because like even if it just bounces again at support, you can still collect that profit right there. But, and then even if you wanted to wait, you could do that. You could just wait until this gets taken and then get in here for a buy because let me show you. That's exactly what happened right here. See, we had trendline liquidity and it sold, swept it, touched this. Oh, it didn't touch it actually. Well, this is a higher time frame order block, but swept this liquidity, filled imbalance, tapped into order block in here, and took off. So easy money. All right. Okay. All right, so here's our weekly candle. Looks very similar to the dollar. We have a very long wick, which is a signal of rejection or a signal of a liquidity sweep. This could very well be the bottom of this ginormous pullback. Let's hit this real quick. 17.28%. Wow. What? Okay, let me just Google something real quick. Oh, okay. So a bear market is defined by a prolonged drop in investment prices. Bear market happens when a broad market index falls by 20% or more from its recent high. Okay, I was tripping because I thought it was 15. So I was like, what? But 17%, that's pretty close to 20%, if you ask me. So we're like right there. Let's see what happens. Let me do this. 17, there's 17. Okay. Here's 20. 16, 7, 6, 2. I'm just testing something real quick. Oh, did it go away? 16, 7, 6, 2. I just want to see where that is. Here we go. Hmm. 16, 7, 6, 2. I mean, it's kind of interesting that there's a perfectly good bullish order block right here that hasn't been tapped into, and there's imbalance that hasn't been filled right where that 20% mark is. Interesting. Is that significant? I really don't know. I just wanted to see that. I just wanted to test out something. Okay. Let me do something on the dollar real quick before we move on. Going back to the weekly, some people could also fib. Well, I mean, it's a down close candle, so that's tough. Okay, it doesn't apply to this one. We'll do it on this one. So if prices to move back up, right? Like if this is the bottom, you could just fib this candle, right? Because during the week, let's go to the 4 hour. We did have a break of structure here. So there's a high, price broke above it. So I think an easy way to just do an analysis right now would be to like literally go like this. Boom, I just did analysis in like 5 seconds. Which that's crazy because I was literally already going to say that. But this is what I was going to say is I was going to say if price wants to start moving to the upside, watch this low because not only Did we get a double bottom right here? I marked a line that all the way to the left, we have this low, right? And you could kind of consider these, I mean, you can technically say this swept this low already, so we'll not pay attention to that. But you can see how these double lows came down to exactly where this low is, which is a really old low. There's going to be liquidity resting here. Okay. So I'm going to point that out because I think it's possible that price could come all the way down to take that and then head up. So we'll just put two different. Dang. So Sunday open, sweep, sweep, sweep again, and then off to the races to the upside. So that's kind of what I see for a bullish, excuse me, week. We do have bearish order blocks. We're not going to worry about this. If you get into swing buy, please like take profit at this area. Don't just assume it's going to go to the high, or just move your stop loss. I've taken a swing buy where I literally was like, I was so greedy. I didn't get out and it tapped into it was a daily order block like this. And I was just like, no, it's gonna go make a new high. The second it touched this, it literally fell back down all the way where it came from. And I ended up taking a loss on that trade, even though I was like literally so much into profit. So yeah, learn from my mistakes. You don't need the whole thing. You just need to get in and out and take your money and go. So yeah, I like that for a bullish. Okay. Here's Friday's low right here. Wednesday's low. Okay. One of these is going to get taken out at least. One of these lows. I just know it. Okay. Talking about a bearish week. We had a 2-day order block right here, I think. Let me go back. Yeah, there we go. Okay, so bearish wise, this would be your Sunday open. You'd sweep the week's high. You would sell into some level of liquidity, just like here. And then you would just buy up to retrace this last bearish leg right here. Tap into this order block, which it doesn't look like it's been tapped into yet. Yeah, nope. And then it just sells off. So this would be your Tuesday, Wednesday. Okay. Watch out on Tuesday, Wednesday news. We could like wick up to this gap and then sell off. Okay. Which, let's just look at our last CPI report. Here we go. Um, July 11th, it was a negative report, which is negative for the dollar. Let's go look at what our reaction was. Okay, so here we go. This is our CPI last month right here, this candle. So, yeah, I just had a revelation because our last CPI report was negative. It's a negative report. Traditionally, that sends the dollar downward. And that will send the stock markets higher. But we've been in a decline ever since that report came out. So that's interesting. So that just makes me think that this is all manipulation. This down move here. I don't think that this is going to turn into a bear market. You know what I'm saying? So dang, that's crazy. It's been moving down for a whole month after that. Yeah. Okay. So let's type this. Ugh.
Bless you.
Thank you. Okay. Um, Pretty similar candle to NASDAQ. I just think NASDAQ closed a bit higher. Um, yeah, so we hit our bearish objective that we had last week. It looks like basically option two played out just in a messy way because we did end with a bullish candle, just barely. But so on this last breakout to the upside, we've been watching. We've been actually expecting a retracement. So this drop in price this week, like this drop in the market, like people are freaking out, but we're not freaking out, okay? Because we had this level marked before the week even started. We saw this gap before the week even started. Okay. So what we did is we fibbed this breakout and we got our 78% right here. So, and it actually came down to almost the 88%. But so this is all, this is healthy price action. This is not scary. This is healthy price action. So this one looks a little bit more like a bottom than NASDAQ does. And then let's just see how much this one has fallen. So this one's only declined 7.5%. So this one's a ways away from a bear market or being classified as a bear market. What I would like to note here is that we do have trendline liquidity now on a macro perspective, because this is the daily time frame. And I can see the entire market from the daily time frame. So like, for example, we had trendline liquidity right here, got swept. We had trendline liquidity right here, got swept. You know what I'm saying? We had trendline liquidity right here, got swept. So let's keep our eye on that. Let's delete this. But as far as retracing this most recent breakout to the upside, I think we're in the clear to start heading back up to the upside. So if the fundamentals, if the macros will be in agreement with this, I don't see any reason why we shouldn't start making a new high. You know, obviously not in the next week, but over time. So that being said, let's fib this candle. Kind of just looking here, like anytime before we start heading back up, there's always another like push down. So like for instance, this bottom right here, we like started to go back up and then price dropped below this low and then headed up. If you see it right here, price made this bottom. We started to push back up and then it dropped below this. Okay, so we may see some manipulation in this area for some time over the next week or so, couple weeks. Because if it is a true bottom, typically that's what happens. All right, so let's go ahead and mark this imbalance here between these two weekly candles. This is a untapped bearish order block. I think it's definitely going to give us a reaction, but I mean, just look at these two. Both of them got smashed through. And actually, this one actually reacted here and it retraced, making a double bottom and then headed up. So that's why I say, like, take profit or move your stop loss when you have like an order block like that, because it could literally turn around on you. It doesn't mean it's not going to make a new high. It just means that, you know, it's got to do some things first. Okay. So I deleted my fib. So we didn't technically break this high like we did on NASDAQ. So typically we don't see retracement until we see something get broken first, if that makes sense. Um, so I think right off the bat, that'll probably be one, like if we are gonna start moving bullish this week, I would think that this would be one of the first things that price wants to do is break this high right here. So we could get, push a little bit lower on Sunday, and then Monday we break this, building this imbalance, breaking this high, and then we get our retracement. Okay, and then we start moving to the upside. And that would also suffice having a reaction here off of this order block, or not this order block, but filling this imbalance. So I kind of like that. So that being said, like we talked about on NAS, yeah, we could just get a retracement into these fib levels, but we have already established that there's trendline liquidity here. So we should be on the lookout for price to possibly sweep that liquidity as it has many times in the past and then start moving up. Who knows? Maybe it just does this week and we end here. And then we get a reaction off that order block on the weekly time frame and we get a sweep and then we start moving higher officially. So, or this might not get swept. But so that's kind of like my bullish spiel. I think my bearish one would basically be what I just said. Here's Monday, and then we get a tap into that order block Tuesday, Wednesday, and then we see price get pushed down either, to make a double bottom, and then the following week we start pushing up, or to go into these lows that we're spoken about right here. But for now, we'll just leave the arrow right there. All right. Sweet. Yeah, that's pretty much it. You can take a peek at news. So CPIs on Wednesday, PPIs on Tuesday, which I'm actually really happy about that. I hate when the news is so late in the week. And then we have core retail sales and of course more unemployment claims, etc. on Thursday. So this is going to be a news heavy week. Let's see, we have 5:30 in the morning, 5:30 in the morning. 5:30. Oh, yuck. Okay, well, we're going to be up extra early this week. But yeah, so news heavy week. Be patient. Price is going to be manipulative. Let it come to the areas we discussed before trying to get in. And yeah, everybody have a blessed week.